Good morning, everyone, and welcome to this morning show, Eyes on the FANG, the show that will focus on the big US tech company names, starting with the first one, Apple. Apple that this week had very beautiful with Nasdaq, having a big, beautiful bounce from the Monday lows. And I bought myself some shares on some of the tech names, but looking for the bounce. Was not expecting such a big bounce, but we are seeing some short covering rally fueling this move higher. So looking for Apple, what can we say? Since the event on the new iPhone, Apple has been basically pulling back even after earnings pull back. So we saw after earnings Netflix pull back, Microsoft, Apple, Amazon, Facebook, every single name pull back. The only one that held on the green after earning was Google, and the rest of the FANG names and the tech names basically sold after earnings. So we had controlled selling. It was not an easy bet because we had the up day, down day, up day, down day. So it was a tricky one. And basically we pull back just into my moving average. 107 has been the moving average for some time. Below that we had 103, 105, $100, and those were the supports before entering the gap at 96.3. This week I started the week saying that 107 was the line in the sand. Shorts would only trigger below 107. They didn't trigger the shorts, they bounced, and after we bounce, we look for to recover the 8 and 21 day moving average. Exactly what happened yesterday. The bulls recovered the 8 and 21 day moving average. 114.4 was the last resistance. We closed above 114.95. So the big question is now what? Now we start looking to make higher highs, higher lows. So the next level to break around 117, we need to break above and stay above 117, 118 to recover $120. Recovering $120, we start looking for higher highs, higher lows. We can pull back, but on the pullback, we will be looking for a pullback, making a higher low versus 107 and start making higher highs, higher lows, and from there resume trying to take out 125 as the next logical level. So for now, bulls recover the ball here on Apple. Looking for Amazon, exactly the same thing. So if you remember, on Monday I said, and I also shared on Twitter, that I was seeing a reversal bounce from 29.50, and what a big bounce. So basically, on the pullback since the earnings report, and basically since the tech selling pressure here on that Tuesday on the Apple event, basically every single tech name sold off. And but it was a controlled selling pressure, and we pull back once again right at my moving average, the same moving average that on September the dip was bought. This time, no different. The dip was bought and bounced back up. I had some more lines. If we faded some more, I had some more between 28.70, 28.90. It was a big area that I would be looking to buy. But on Monday, I saw a potential for a reversal bounce. I called the reversal bounce 29.50, and look where we are right now. So we closed at 32.41, and with a big gap. These can be a bullish gap. What I mean by a bullish gap, gaps that never get filled in the short term. Maybe in the future they can get filled, but for now, what we have, bull case scenario above the 821, basically all the moving average. And now what? If Amazon goes above 32.45, we will be looking for possible 32.92 to start making higher highs. So that's the level to break. Above 3300, watch out, big short squeeze all the way into 3400. Bull case here on Amazon, while we are above yesterday low. So 31.39 is my support. If the stock somehow reverse back down and cross below 31.39, I'll be looking for a possible fill the gap here. But for now, powerful 2 days action, and I will continue to monitor if we are going to continue in next couple of sessions into the bull case. Facebook is exactly the same thing as Amazon. Bullish gap here. Yesterday, after the market opened, I shorted around 285. I shorted on the pullback with some puts. I locked my cash flow and closed the position, and it was the right thing to do. I was looking for a possible fade. It faded. I locked very nice profits on those puts, but the momentum kept going, and they bought the dip and push it back up. So now what? Very bullish while above 278. 278 is the line in the sand. Bears try to strike. Myself, I try with some put scalps. I lock my profits, and bulls bought the dip and push it back up. So above 289, what we have, $290, and above that $300 is the target. I'm bullish on the stock after yesterday seeing that the dip was bought, and we are seeing a face ripper short covering rally. 278 is my support line. We'll be only bearish below 278. Below 278 we have 273, 271, and a gap to fill around $270. But otherwise, what I'll be looking is a possible short covering rally all the way into $300 target. Netflix is the one that's still fighting here. What I'll be looking, if it goes above 508, yesterday highs, we will be looking for $514 last week highs, and fill the gap at $522 target. So that's the one that I'll be looking to possible play catch up, and if the momentum keeps going, filling the gap at $522. So where we stand with the FANG. FANG is the dip was bought on Monday. I got some shares, for example, on Twitter and on pins on Monday. I was looking for a bounce up, not that big bounce up, and we are seeing very big with Nasdaq recovering 12k so this morning. So big short covering rally here, trapping the shorts on the Monday lows. We caught the low perfectly on Monday. If I was able to anticipate this kind of move, I would load and hold, and but I'm here to try to generate cash flow on a daily basis, and was very happy with the profits on Tuesday, and with the overnight holds, and yesterday also some more profits locks on space, for example. So try to be careful. We are seeing a short covering rally, but we finally a bit out of the woods, above the 8 and 21 day moving average on the short term. So the short term for now is pretty much bullish, at least for the action that we are seeing. Today we are going to have the Fed meeting, 2 p.m. Let's see if they will keep pumping the market and bringing the necessary liquidity, or if we are going to have a change on the tone from the Fed, and if the market fades a bit after 2 p.m. So stay tuned and don't miss the next episode. Thanks everyone. Bye bye. See you.